we're right in the thick of some more earnings, right? It's not over yet, folks, and a lot of retail names. And Diane King Hall is with us looking at some of these names. We'll start off with Five Below. Good morning to you, Diane.
Good morning to you. Well, Five Below's been on a tear this year, and this most recent quarter was no different. They handily beat expectations on the bottom line. They beat on the top and bottom line, but it was a big beat on the bottom line. Adjusted EPS coming in at 68 cents a share. The street was just looking for 24 cents. Revenue topped $1 billion. The street was looking for a little more than 983 million. So again, better than expected on the top and bottom line. Shares are moving a little bit higher in the early action, 1.5%. But keep in mind, before today, this stock had already rallied some 55%. It is raising its full year outlook for the second quarter in a row after delivering these blockbuster numbers here. And you know, with sales coming in at just over $1 billion, that's a jump of more than 20%. Same store sales surge 14%. That is nearly double what Wall Street was expecting. The newer CEO, Winnie Park, has really been revamping this company and has delivered across the board, whether we're talking about Gen Alpha, Gen Z, or millennial shoppers coming into this store. They really like it. It's really light and bright when you go into the store. She's been leaning into trends, for instance, like K-pop Demon Hunters, which has been very, very trendy. Now, to be fair, Five Below isn't just about $5 and below. They do have some segments that are higher than that. They call that the 5 and beyond segment. So it's not just about value in the $5 and below. She says there is value beyond that as well. So she pointed out momentum in its $7, $10, and even $15 plus products, which I didn't even know they had above $15. They opened dozens of new stores in the quarter. They've had strong traction in new markets, so they're really firing on all cylinders. They're expecting full year revenue to reach up to $4.65 billion. Adjusted EPS expected to come in as high as $5.89. Nicole.
Year to date, up 55%. Right? Wow, you know, there are some Mag 7 names that really disappointed folks this year. And you and I were talking about Macy's. Aerie did so well for American Eagle. You know, these young folks are buying bits and bits and bits, and it adds up. Let's talk about Dollar General now.
Okay, Dollar General. Year to date, that's been a strong performer as well. So it shows that the value trend is continuing off the back of their most recent quarter. They did better than expected on both the top line and bottom line. The bottom line much better than expected. Bottom line coming in at $1.28 for EPS. Street was looking for 95 cents. Revenue coming in at 10.65 billion. So a slight beat. Street was looking for 10.64 billion on that one. Shares moving, rallying big today, up another 9%. Again, this one was an outperformer year to date as well. So its move today will put it on par with Five Below in terms of year-to-date performance. Solid upside surprise here. Guidance, they're lifting that again, putting the wind at its back for Dollar General. Management lifting full-year EPS to between $6.30 to $6.50. That's up from $5.80 to $6.30. That's its third straight increase in guidance in a row. Same-store sales, their outlook for that is ticking up. That they're seeing that between 2.5% to 2.7%. Previously, they saw that at 2.1 to 2.6%. They are seeing more traffic, so there's some traffic gains that's setting them apart compared to, for instance, Dollar Tree. Dollar Tree has been performing well, but Dollar General say, hey, more people are coming in here, and it's not just about what's typically, you know, their typical shopper. You are seeing even the, you know how we talked in recent years about Walmart seeing that shift in the higher income shopper. They're doing that as well here.
All right, look, Dollar Tree, Dollar General, as you noted here, right at these highs, and Dollar Tree, you know, climbing back towards the highs. It's just a few bucks off of its high way back in August. Okay, let's talk about Kroger, last but not least.
Kroger, that's the disappointment in the bag of retailers this morning. So they missed on their on sales, right? So you're seeing shares get dinged this morning. Shares off more than 3.5% right now. So again, a mixed quarter. Adjusted EPS did beat expectations at $1.05. Sales coming in at $33.9 billion. Identical sales, also some weaker than expected results there. their same-store sales outlook. Now they see that between 2.8 to 3%, which is they're trimming the upper end of their guidance there, because previously they'd seen it between 2.7 to 3.4%. So there's some disappointment here. They're tightening the band on their expectations from here in terms of full year EPS. They're narrowing that to 475 to 480. That's down from 470 to 480. So again, it's a different quarter in this most recent quarter for Kroger than their previous quarter, and you can see that in terms of their adjustment to their guidance, Nicole.
Diane King Hall covering all the earnings for us this morning.
Thank you.
There's no ugly. I mean, it's like good and less
Not
good.
so good. Yeah,
Yeah. Okay. All right. Diane King Hall, thank you very much. Great to see you this morning.